Hey, welcome back to Tuesday Guy Trade Stocks. I'm Dylan.
And I'm Vinny. And we're going to take a look at Google's most recent quarterly earnings. I'm a Google shareholder. You're a Google shareholder. We're going to talk about Michael Burry's exit from Google and why that may have mattered as far as timing wise. And we're going to get into this quarterly report in terms of what I would do now with my Google shares. So we'll get to it. All right.
All right.
So, this is the most recent filed 13F filing for Michael Burry and his Scion Asset Management. He disposed of all of his Google shares, all right, and it was as of the end of March of this year. Now, we should be getting another updated one from him the next couple of weeks, but that's the most recent one we had, and at that time, he held no Google. Right?
He sold before that whole run up to 180,
Yeah,
so he missed all
yeah,
that. Bad
yeah,
timing.
yeah, exactly. As of the most recent reported filings there. All right, so pretty bad month for Google, which is one of the largest tech companies in the world, right? And it's been an absolute like stalwart of technology for a while. Down 10% in a month. Is it a 10% off sale, or is it actually justly deserved and the company's headed towards crap? I don't know. All right, but don't forget, like when you see those numbers over like the last month, it's still up 21% almost year to date, which is ridiculous. That's more than double what the S&P 500 historically returns on a yearly average, right?
Yeah, I
And
think
pretty
this
phenomenal.
is this is more a is this a healthy correction because it's gone up a bunch or a changing of the tides, right?
Yeah, yeah. My Google cost basis is like just under $100 a share. So, and I haven't owned Google that long, a couple of years. It's just being patient and buying it when I had the right opportunity. So that's the question: is this another great opportunity to buy Google shares? All right. So when we get to the report itself here, the top line revenue growth for the most recent quarter, 14%, and then 15% on a constant currency basis. Compare that to last year where it was 7 and 9%. So they've gone from upper single digits to mid teens in terms of year over year growth, which is commendable, right? That's awesome. I love to see when a business can do that. Additionally, it's not just them scraping the bottom of the barrel for any revenue they can find. They're getting high quality revenue because looking at the operating margin, it's increasing year over year, 29 to 32%. All right.
And
Um,
this is a $2 trillion market cap company. This is not a
it
that's
is.
important.
Yeah, exactly. And then you get additionally when you see that margin expansion, the revenue growth, and they're buying back shares. Don't forget they have like one of the largest share buyback approvals out there. I think Apple is the one that is larger. They're chewing up shares a little bit. So look at the kind of explosive growth you see in earnings per share. Last year $1.44, this year $1.89. And the net income itself was significantly higher too. But they're when you get on a per share basis, it becomes even more powerful because of that buyback program. We're going to talk more about the buyback program here in a second, though. So where did this growth come from? All right, this is one of the concerns with the report and why the market per se wasn't exactly enthused about it. It was the old kind of stalwart business line Google search that provided the majority of this growth, right? This 42.6 billion to 48.5 billion. This is like the classic ad business, right? Whereas when they break out YouTube, yeah, there was growth, but it wasn't as much growth as they expected. Right? That was kind of one of the things that the analysts didn't really love about this report. Right? One other thing I would highlight here is Google Cloud. 8 billion in revenue last year too, 10.3 billion this
Yeah,
year. This is
that's
the
growth.
first quarter over 10 billion revenue. And when you're talking about a profit basis too, this was the first time the Google Cloud crossed $1 billion per quarter in profit.
Yeah,
Right.
that's fantastic.
So nice. Yeah. All right. So this is back to the profit and operating efficiency of the company itself. Google services, that's like the main stalwart business there. 29.6 billion. So the majority of the profit is still coming from search by far and away. Cloud is definitely growing, and now you're looking at that 1.1 billion dollars in net quarterly profit, which is solid. Especially when you're looking at the fact that this business segment is growing significantly faster than the old mainline business, right? Um, and then other bets. They talked about how they're going to be investing a $5 billion towards Waymo. Waymo is definitely making inroads and delivering on this virtual taxi business more than other companies that have talked about it a lot more in their press releases. Tesla, uh, um, but they're still not a profitable part of business, and probably won't be for quite a significant period of time. And then don't forget, Google also started paying a dividend recently. So this is where the payouts for the dividend by class is broken down. I'm not the biggest dividend guy, so this
I'm
to
not
art
either.
to me, I'm like, sure, nice, but not going to move the needle for me. All right. So other things have been reported here. This is highlighting what I was talking about in terms of their operating efficiency. Look at the cost of revenues, right? So they went from in the quarter, we'll look at that first, 74.6 billion in revenue to $84 billion in revenue, right? 84.7. But the cost of the revenues only went from like just under 32 billion to 35.5. That is
Okay.
some fat margins, right?
Yes.
You love businesses with that sort of power. Yeah. Same thing on the whole year to date, right? This 144 to 165, so significant growth on the revenue side, but the expenses don't move nearly as largely. So 62.5 to 69.2. That's the power of having a wide moat. That's a very durable moat, and people are obviously paying a premium for services that Google provides, which is things I love to see as a business owner, right? All right. Back to this portion about EPS. Yeah, the same kind of highlight that we had before, where you're seeing how much more dramatic the EPS growth can be as they're chewing up shares. Their share count kind of destruction here isn't as aggressive as I would love to see. Unfortunately, it's just they're such a big company that even like $100 billion stock buyback doesn't really move the needle when you're $2 trillion market cap.
Right. It's only like 5%. So
Yeah. Yeah, exactly. That's over a period of time compared to Alibaba, who's much more efficient with that. But I'm going to show you a chart actually here. Yeah, here it is. This is the actual, kind of share count from macro trends of Google shares outstanding. So they are making progress on their share buyback. They've been doing it for a few years now, and you are definitely seeing a net reduction in the number of shares outstanding. Yeah.
yeah,
When we
that's
go
pretty good.
back to this is cash flow statement, just to kind of highlight, their share buyback and how powerful they are. So repurchase of shares, $14.96 billion most recent quarter, but they had $5.7 billion of stock-based compensation. So like roughly a third of the kind of shares that they're buying back are also being given out in that new quarter as minted new shares for employees. All
I
right.
That's kind of a lot. That's a large portion of the buyback.
It is. It is. It's definitely something you see a lot with these like tech companies. Like they would have to be issued or buying back $6 billion of shares per quarter just to maintain like a consistent, even number of shares outstanding. But that is definitely something you see problematic with, particularly with large American tech companies, that they have to be doing these buybacks in order to be, chewing up shares. Never mind, or just maintaining even share count. All right, free cash flow. This is the thing that I like to track the most. Now, is it the best metric for Google right now?
No.
It's debatable because what they're doing is they're going through an investment cycle where they're putting a lot of infrastructure in for their AI products, right?
Yeah.
So capex is significantly higher now than it would be in previous times. I didn't go back and dig up what their old capex was, but the CFO on the call talked about $12 billion per quarter being kind of their baseline going forward for a purchase of property, plant, equipment, which is their investment in assets. She also said it's mostly servers and data center space. Like that's what they're investing in.
It is odd to have a $2 trillion company that could see tremendous growth because we looked at this earlier. It was Google and Meta of the Magnificent Seven stocks that were actually relatively to the other five the cheapest valued. The PE was under I think theirs was like 28 or something close, whereas
Mm.
other stocks were in the 50s, 70s with Tesla, nvidia, Apple is very high.
Yeah, yeah, absolutely. So they did generate $13.5 billion basically in free cash flow this quarter. Trailing 12-month free cash flow is 60.8 billion. And we're going to carry that number forward here in a minute. All right. Some notes from the conference call from listen to. Last call, current CFO, they're having a regime change, which is, can be good for a company, kind of shake it up a little bit and see what the next management's going to do in terms of capital allocation. I don't know, it's too early to say if that's going to be a positive or negative thing. Obviously, the CFO that's been there has been there for a long time. I think she said 9 or 11 years, something like that.
Jeez.
But it was something to keep an eye on and watch what their capital allocation looks like on the future quarters. So, they were positive on the AI uptake amongst their 100 largest customers. That significant portion of them are using their AI products. That AI itself is driving their cloud growth rather significantly. It's their products and people coming to use their products that are really kind of moving the needle in terms of I think it was like 29% growth in their cloud sector for this quarter. And then they also talked about how they're using AI internally to make the engineers more efficient, giving them better tools. And that you did notice on the reports. I don't remember if I included a slide of this or not, but their headcount was down year over year. So they're $5.7 billion in stock-based compensation in most recent quarters, going to fewer employees. So that's good.
Okay.
Um, and that their operating margins on some segments were approaching 40%, and that was maintainable is what the question was. And they said, yeah, we think that is something we can actually maintain our current operating margins. So it's a good thing. Not really facing a kind of price crunch there. All right, so this is the numbers where the rubber meets the road, so to speak. Here, this is the market cap as of today. Been interesting to go back and calculate it when the shares were like $190 a share, but I didn't do that. $100 billion in cash and cash equivalents. $13.2 billion long-term debt gives me an enterprise value of like 1.98 trillion. That's 60.8 trillion 12-month free cash flow. It's only a 3.1% free cash flow yield. This is pretty paltry compared to the Google we saw not that long ago when I was buying shares. This is last quarter, it was 4.1%, so it was a higher, just 1% higher just in the last quarter. As you've seen the multiples for all these large mega cap companies kind of expand significantly, they come back down over the last week or two, but they still have expanded significantly from where they were even just a quarter ago. And when I was buying Google, it was like over 5% or right around 5% from a free cash flow basis. So they've become a little bit stretched in terms of valuation since the most recent kind of run up here. I am not interested in buying more Google at the current share price, but I am still going to continue holding my Google shares. I don't see any reason based upon the report why I would even consider selling at this point in time.
We need to talk about the elephant in the room here because these are all numbers, right? But ChatGPT announced a possible search engine, what Search GPT, I think which would be a direct competitor to Google.
Yeah,
So that
interesting.
could be a game changer.
Google did mention something about how more 18 to 24-year-olds are actually using their AI like search tool than just traditional Google search as well. So it might be like a generational rotation in search. I mean, I'm a millennial, so I'm still someone that just Googles things. I don't use AI that often.
That's fair.
But
I do think the ChatGPT search could be a real issue going forward. I don't know the actual impact. It's way too early. Obviously, it doesn't exist yet. But that is a little bit nerve wracking, to be honest, because ChatGPT, we've seen a lot of people use it for a lot of incredible different things. Having its own search engine, which would draw traffic away, that would severely hurt Google because you see where we get our ad revenue.
yeah,
It's all Google search.
yeah, I really hope that narrative takes off and Google stock plummets down to like $70 a share, because then I'll not be shy about it. Like when I was with Meta, I'm gonna just buy a crap ton. So
That's fair.
really keep pushing that narrative that like the AI ChatGPT search is going to destroy Google's
I
business.
don't
I don't think it will.
I don't think we're gonna hit 70. I don't think that's gonna happen. But all right,
Hey,
guys.
so same
Huh?
thing about Meta.
Don't even get me started. All right, guys. Let us know what you think.
Catch you next one.